The founders of Three Arrows Capital speak out about the failure of a cryptocurrency hedge fund. Welcome to Lynk channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. July 22, 2022. According to Bloomberg crypto tweet. After weeks in hiding, the disgraced founders of Three Arrows Capital finally speak exclusively about the spectacular implosion of their once high-flying hedge fund. The humiliated founders of Three Arrows Capital opened out about the stunning collapse of their once promising hedge fund after spending 5 weeks in hiding. They claimed that their botched cryptocurrency speculation had set off cascading margin calls on loans that should not have been taken. Kyle Davies and Sue Zhu, both 35, originally grew close in high school. Before its collapse, which forced creditors into bankruptcy and accelerated a sell-off that caused significant losses for mom-and-pop owners of cryptocurrency and other tokens, they had developed Three Arrows Capital into a crypto trading juggernaut. Speaking from an unidentified location, Davies and Zhu outlined a systemic failure of managing risk in which the effect of wrong-way bets was made worse by easy access to credit. They were alternately remorseful and defensive. Although they admitted that the collapse caused significant suffering, they mainly avoided discussing how it affected other businesses in the sector. Instead, they emphasized that they had experienced substantial losses and refuted claims that they had taken money out of Three Arrows Capital before everything went south. People could think we're foolish. They can label us as foolish or naive, and perhaps I'll agree to that. However, they're going to claim that I misappropriated money during the previous period, when I really contributed more of my own money, which is not true. In documents filed on July 8, the advisors in charge of liquidating the fund claimed that Zhu and Davies had not cooperated with them and that they were unable to ascertain their locations. Death threats, according to Zhu, were what drove them into hiding. It doesn't mean we haven't been in contact with all the necessary agencies, and since the beginning, we have been in contact with them. Zhu stated during the phone conversation with Davies and two legal professionals from Solitaire LLP. The two refused to reveal their whereabouts, but one of the attorneys on the conversation said that their final destination was the United Arab Emirates, which has become a hotbed for cryptocurrency. The former Credit Suisse traders provided a comprehensive account of the events leading up to the collapse of their fund, which in turn sparked a domino effect that has cost businesses and casual investors billions of dollars. Davies said, "The entire scenario is terrible, and a great deal of money was lost by many individuals." In documents filed with the British Virgin Islands, creditors of the fund believe they are owed over $2.8 billion in unpaid claims. Based on the court documents, the number will likely climb dramatically. A minimum of $40 million worth of assets have already been taken over by liquidators managing the insolvency. In an industry known for extremes, Zhu and Davies, who have long been among the most outspoken proponents of cryptocurrencies, entered into trades, fueled by leverage, that placed Three Arrows Capital at the epicenter of a string of explosions that shook the cryptocurrency market as prices fell this year from their peak last fall. Zhu has said that they prepared themselves for a market that ultimately didn't materialize. David says that they believed in everything to the fullest. All or almost all their assets were there. Then, when things were going well, they did their best. Then they suffered the most losses during the tough times. At the same time, they assert that they weren't abnormal. They outline a cluster of interconnected one-way bets and accommodating financing arrangements that all came crashing down at once, causing not just the fund's destruction but also the insolvency, hardship, and bailouts of companies including Celsius Network, Voyager Digital, and BlockFi. It's not surprising that Celsius, us, and companies of this type are experiencing difficulties at the same time, Zhu added. We have our own resources and a separate balance sheet, but we also accept deposits from these lenders and pay interest on those accounts. Therefore, if our firm involves receiving deposits and later producing yield, we must engage in comparable trading. Zhu and Davies' attempts to shift the responsibility stand in stark contrast to their prior unrelenting promotion of crypto assets and denigration of detractors. creditor allegations that the founders made a deposit on a $50 million boat before the fund failed last week frayed nerves once more, according to Zhu, who called the allegations part of a smear effort. Zhu stated that the yacht was purchased over a year ago with a commission for construction and usage in Europe, and it has a complete money trail for the it. He denied leading a lavish lifestyle, saying his family only owns 2 residences in Singapore and that he commuted by bike each day to work and returned. Zhu also said never once were we observed making large purchases in clubs. We never appeared to be sort of cruising in Ferraris and Lamborghinis. This type of accusation of us, in my opinion, is simply a typical example of how headlines like these are often used when things like this happen or when money runs out. Davies and Zhu admitted to suffering significant losses from transactions involving Luna and the now-defunct algorithmic stablecoin Terra USD, claiming they were taken aback by how quickly these tokens fell apart. We didn't foresee that Luna could rapidly decline to effectively zero, which would trigger a credit crunch across the market and put enormous pressure on all of our illiquid assets. The company could have been too close to Do Kwon, the man who founded Terra. Zhu added. As Do Kwon relocated to Singapore, we got to know him more personally. Additionally, we received the impression that the initiative would do great things and had already accomplished great things. If only we had been able to recognize that it had grown too quickly and too huge, that it was now possibly attackable in certain aspects. Zhu pointed out that it resembled a long-term capital event for them in a lot of ways. They all had distinct professions that they believed to be worthwhile, and others shared their professions. After that, everyone was sort of quickly marked down. One of those deals included an Ethereum-linked coin called Staked Ethereum, which is frequently used in decentralized finance and is intended to act as a tradable substitute for Ether. The turbulence produced by Terra's collapse drove its market value to drop below 1 Ether, despite the fact that every staked Ethereum is intended to be redeemed for 1 Ether once long-awaited updates to the Ethereum network take effect. According to Zhu, this led to additional investors placing trades that may profit from the growing difference. Because of Luna, there was a lot of concern about whether other people who were leveraged and long bet in Ether would be forced to liquidate their holdings when the market fell. Therefore, the entire industry effectively sought out these jobs, reasoning that, since it could be basically sought out. Even yet, the fund managed to keep taking out loans from significant digital asset lenders and rich investors until, that is, they have blown themselves up. Zhu claimed that lending institutions were confident with Three Arrows Capital's financial situation following the collapse of Luna, and that they permitted the company to continue trading like nothing is wrong, despite the fact that many of these borrowings had only required a very tiny portion of collateral, as recently disclosed in court filings. Therefore, I just believed that we carried on with business as normal throughout that time. However, following that day, when Bitcoin, dropped from $30,000 to $20,000, it was incredibly difficult for us. And that ended up becoming sort of the final nail in the coffin, and if we had been more aware, we would have realized that the credit market may go through cycles and that, we might not be able to get more credit when we need it. If, everything kind of blows up. He added. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.